Welcome back guys to another Zero DTE video, and today Coach Ernie is going to be talking about convexity, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description to join the world's #1 Zero DTE trade destination. Enjoy guys.
The risk that we take is very, very small. There's a term that I've been using lately that defines how small that is and where that point is that we're taking that risk. Anybody know what that is?
It's the convexity point.
Convexity.
That's exactly right. Convexity. That is a very interesting topic, and it's a hard one to explain to a lot of people. We're trying to find our position in a trade that is the convexity point. It's hard to put it into really simplified terms. I can put it into complex terms, but in a simplified way, it is the point between it's not worth it and it's just before it starts getting big. So it's that point on, if you were to look at an exponential growth curve, like a hockey stick, it's that point where it turns right there. That would be one way to explain it. Another way I explained it last week was, if you don't know, that Warren Buffett, in fact, is a convexity trader. He plays by the same principles. In fact, he has a very famous saying where he says, buy when everyone else is fearful and sell when everyone else is greedy. You might be thinking, where is that point? Where does that lie? Exactly. Where is that? That is, in fact, the point of convexity. And it's not so much as a mathematical construct where you can plug in a formula and say, there it is. It's something that exists and you can see it. And it changes from situation to situation. And it's kind of like why we change up our strategy as we go further and further out in time. When conditions change, we have to get closer to that convexity point. In a zero DTE world, that convexity point is a little more difficult to see because it's a little more gradual. And as you go further and further out, that convexity point starts becoming more sharp. It's like it goes from this to this or to like that. I don't know if that makes sense, but that's what happens. As you go further and further out in time, that convexity point becomes a little bit more clear. There are ways that we can identify it in the longer term strategies. Zero DT is a little bit more difficult, but as we get out into longer term, 3 to 5 days, 5 to 10 days, 10 to 30 days, and so on, that seems to be a point where most people are not interested in purchasing those options, for instance. There's a point where all of a sudden you see the volume go way down and open interest go down and pricing going down. And then from there, it just goes down into the cellar. For the most part, that is convexity. And it's the same thing that we're doing zero DTE. People wonder why I put the butterfly out so far. And the first thing that I usually hear when people are uninitiated with this strategy is that, oh, the price is never going to get to the butterfly. You're never going to make any money there, because they think that the object is to get to a target. Our object isn't get to a target, because we don't know when you get to that target or if, how big that target's going to be. Our objective is to, for all the other times, which is going to be the vast majority of the times, is to be safe, not blow up, not lose money. So that is our primary purpose, to find that convexity point. In really short term, it's a little more fuzzy, so you got to play with it a little bit. As you get further out, it starts becoming more clear. And that clarity usually is around a certain price point.
Thanks for watching guys, I hope you enjoyed the video, and if you did, make sure you hit the subscribe button and the like button below. If you're interested in becoming a pro trader, remember to check out the link in the description for Ernie's Skool Community.